I do a lot of real estate market analysis. I spend most of my time examining the housing market and differences between certain states, certain cities. And I've noticed this funny thing about the state of Florida. It's very polarized in terms of market performance. So when I pull a list like for top cash flow markets or appreciation markets, I'll very often find some cities in Florida at the top of the list and both at the bottom of the list in terms of performance. This is one of the reasons why I personally find it more important and useful to look at specific metro areas rather than make large generalizations about the entire state. So today, that's what we're gonna do. We're gonna look at 3 unique markets in Florida. We're actually gonna skip over some of the biggest cities in Florida like Miami or Tampa or Orlando. We've covered those a bunch of times on this channel. Instead, we're gonna look at some of the less talked about, but still good sized cities like Jacksonville, Cape Coral, and Tallahassee, Florida. We're gonna dive into each of these 3 markets, compare and contrast their fundamentals, and talk about which strategies could work in each of them. And if at any point, any of these markets sound interesting to you, you wanna learn more, make sure to check out the BiggerPockets Agent Finder. It's a free tool that allows you to connect with an investor-friendly agent. You put in some information about yourself, and you're gonna get matched with someone who can help you find deals, help you understand what neighborhoods within these larger markets make the most sense for an investor, and generally just be the boots on the ground for you. All right, so let's dig into each of these cities, and I'm just gonna give a brief background on each. First up is Jacksonville. It is the biggest by far of our 3 cities we're talking about today. Population of 1 million people, about 1 million, and growing quickly. So it's at about 2.3%. It's faster than the national average, but actually when it comes to Florida, that's only modest because the whole state of Florida is just booming in terms of population. The median home price in Jacksonville is $300,000, making it more affordable than the average US city right now, but relatively low growth over the last year, under 1% year over year, something we're gonna get back to in a minute. The median rent is about $1,700, which is actually down from a year before and is also a theme that we're gonna hit on a few times in this video. The second market is Cape Coral. It's a much smaller city, only about a population of 200,000 on the west coast of Florida. It's near Fort Myers, a few hours south of Tampa, and it is just experiencing wild, insane population growth. It's 12% in just the last 2 years. Just so you know, like on average in the US, it's like 1% per year right now. So 12% in 2 years is super fast population growth, and that matters, which we'll talk about. The home price is more expensive in Cape Coral. It's $392,000, but it's still under the national average, so that is good. But Cape Coral, you should know that prices have actually declined year over year by 1.5%. And that's something that you should be paying attention to because although most housing markets are growing right now, anytime you're considering an investment in a market that has seen price declines in the last year, that's sort of, it's not necessarily you shouldn't invest in it, but you do need to adapt your strategy a little bit around it, which we're again gonna get to. Rent in Cape Coral is super high at $2,400 a month. It is also down $150 year over year, but given the rent to price ratio, it's possible to make cash flow work in Cape Coral. The third and last city that we're talking about today is Tallahassee, the state capital. Similar size to Cape Coral, about 200,000 people, growing a bit faster than Jacksonville with 3% growth in 2 years. Median rent, Tallahassee is about $1,400 a month, down $200 year over year. So that's a lot, but the median home price is just $286,000 and it is up a whopping 5.8% year over year, well above the national average. You can see sort of what I meant at the beginning of this video, that Florida is somewhat polarizing in terms of prices. We see that, Jacksonville, slow and steady right now. Tallahassee's growing rapidly at 6% appreciation, while Cape Coral is actually experiencing one of the larger declines in the whole country right now. It's only down 1.5%, so it's not anything crazy, but most markets are growing right now. But seeing a decline is notable. Now, I do want to throw this chart up here quickly, which just shows year over year price growth over the last couple of years, because it tells more of a story than just looking at the most recent data point. And what you see specifically for Cape Coral is that although it is in a correction and has been for over a year, it also experienced the greatest appreciation during the pandemic. We see that it was above 30%, which is crazy to say. It was above 30% for like most of 2021 and 2022, even spiking above 40% for a brief moment in time. And so it's still prices, even though they are coming down, and that is important to note, they're still well above pre-pandemic levels and certainly haven't crashed in any sense of the word. That's what's going on today. But we need to sort of look at some other housing market metrics to look forward a bit and understand what might be happening in the near future, because that can really dictate sort of what your strategy is in each of these markets. So the first thing we're going to look at is inventory, which is basically a measurement of how many properties are for sale at any given point in any of these cities. And the reason we look at this is because inventory is the best way to measure the balance between supply and demand. When inventory is high, that usually means that you're in a buyer's market, so buyers have the power. Prices are a little bit softer, and your expectations for appreciation should be lower. When inventory is low, that usually means you're in a seller's market, so there are more, buyers out there than there are sellers. That gives sellers the power in the market, and usually you can expect prices to at least stay flat or perhaps even appreciate over the next couple of months. And so what you see here is three very different markets. In Cape Coral, where we're seeing a correction, you see that inventory went from very, very low during the pandemic to not just higher than it was then, but higher than it was pre-pandemic. So that's not surprising that we're seeing a correction, because when inventory moves that much in an upward direction, that's usually when prices soften. This is fundamentally sound. When we look at Jacksonville, the next line down, which is blue, you'll see exactly what you would expect. Remember, Jacksonville was up 1% year over year, so nothing crazy. And what you see in inventory numbers is relative stability. It's certainly higher than it was during the pandemic, but we're still a bit below pre-pandemic levels, and that's why the market is mostly flat. Lastly, when we look at Tallahassee, we see that inventory has been steadily declining actually for 10 straight years, and it is now lower than it was even during the pandemic when everything was artificially low. And so it's not surprising again to see Tallahassee prices appreciate, because that's what you would expect in a market where inventory has been continuously declining, especially a market where inventory is declining, where population is growing like we see in Tallahassee. Now I'll put one other chart up here on months of supply. This is another way of measuring inventory in the market. This is just another way of measuring inventory. And what you can see here, and what I want you to pay attention to, is how volatile Cape Coral is here. Usually in the housing market, you see seasonal volatility. This means that, you see a spike in inventory around the same time every year, then it declines the same time every year. What's not normal is seeing these big fluctuations in inventory or months of supply. But we're seeing that in Cape Coral. And to me, that's a bit of a red flag that I would want to keep my eye on. And we'll talk about that more when we talk about investing strategies. So that's where things are looking in terms of inventory, which should inform what strategies might work in these markets. But first, I wanted to address something we talked about earlier, which is why rent is declining. Now, even during housing market corrections, rent declines are relatively uncommon. I mean, they happen, but they are usually less severe than housing market declines. Just as an example, during the Great Financial Crisis, we saw that housing prices nationally went down more than 20%. Meanwhile, rent in most markets went down 2, 3, maybe 4%. And so the scale of the declines is much different. But we're seeing significant declines in rent right now, particularly in Florida. I believe, there's no way of knowing for sure, but my hypothesis here is that it's all due to multifamily overbuilding. Now, basically during 2021, 2022, things were going so well in states like Florida that developers who want to build multifamily housing went all in. They put a lot of money into it. They got permits. They're building a lot of units. But it takes a year or two for those things to come online, and a lot of supply is coming online. So stuff that got started building a year or two ago are now hitting the market. And there's this short-term glut of supply that is causing operators to compete with each other. So there's all these units, and to compete for the tenants who are looking right now during this month, the different operators have to lower their price to attract tenants, and that's pushing down rents. There's no saying for sure, but we see this sort of nationally. Multifamily is oversupplied in the short run, and Florida does tend to be the state with a lot of oversupply, and these three markets are good examples of that. I personally think they're likely short-term issues because there's so much population growth. These units will eventually get absorbed. That's what this is called in multifamily, absorption. They'll get absorbed, but it might take a year or two for that inventory to get worked through. So that's my personal belief about why rent's going down. But that's obviously really important for your investing strategy. That brings us to investing strategies. I would treat each market here a little bit different. So if I were a buy and hold investor, I would consider really any three of these markets, but in Cape Coral, I would be especially patient, and I would really try and find a deal that was under market value. Cape Coral has actually excellent long-term fundamentals. It's still relatively affordable. There's this incredible population growth, but there's a lot of volatility. We're seeing weird, unusual amounts of movement in inventory, and that means I don't have a good read on it, and I don't like investing personally in markets that I can't get a good read on. And so if it were me, I would just take my time and I would just see what's happening in Cape Coral if you're interested in that city, or go talk to an agent, go talk to a property manager who's going to be helping you figure out what's going on in the market more than I can. Because I look at this data, sort of take this 1,000-foot view, but they could probably tell you realistically what's happening and what decisions you should be considering. Next, if you're going to consider a market like Jacksonville, I think a lot of strategies can work because it's kind of just slow and steady, right? And that's what a lot of investors, that's personally what I look for in markets, is that they're growing a little bit. But again, it's only growing 1%, and you are seeing rents decline. And so one strategy that could work in this kind of thing, if you're into long-term investments, is buying something that needs an upgrade, doing a sort of cosmetic rehab to get your rents up and get it cash flowing. It might not cash flow the first month or maybe even the first year because you're going to have to invest some money, but finding properties that are fundamentally strong and just need, a freshening up on the inside, getting it up to speed so that you can get it cash flowing, that could work really well in a market like Jacksonville. Lastly, Tallahassee is a market, if you're going to do a BRRRR property or do a flip, it could work really well. Value add would work really well in a market like Tallahassee because the rent to price ratio is not great. So it's going to be tough, not impossible, but tougher to find cash flow. But with all of that appreciation and continuing low inventory, there's a good chance that prices are going to keep going up over the next year. That's just what I see here looking at the data, but I would love to hear from you. Any of you who live or invest in these cities, let me know what strategies are working for you in these markets in the comments below. If you do want to learn more about these markets, make sure to connect with an investor-friendly agent in the market by going to biggerpockets.com/agent. For BiggerPockets, I'm Dave Meyer. If you have any questions, thoughts about this video, you can always hit me up either in the comments below or on the BiggerPockets platform. Thanks for watching. I'll see you soon.